Okay, so a little update on my portfolio. I had a pretty good week. Um, so my portfolio was up, let's see, 4.6% this week. That's roughly $6,500 in 1 week time. And month to day, I am up, just on October, I'm up 22%, 22.4%. All I'm trading is just a future derivative, although I do use very high margin leverage. For the 1 month time, so from 30 days to 31 days, I was up 17.8%. I'm usually being up for 10%, but this last few months has been up like, well, close to 20. So it was like 14, 15, and now it's 17.8. I guess this month is actually doing much better than before. It also varies because it depends on when my portfolio starts. Because if you get a dip somewhere like here, then it could skew the percent return. And year to date, I'm up 136%. So the year is not ending yet, so who knows? Maybe the portfolio could drop. I'm up almost 95,000, and most of it happened around here in June to July, and then it just bounced off. Because like for the most of the year, I had to work and I don't really have time to trade or anything, and most of my entire portfolio was stuck on a one very big silver trade, which eventually paid off. Because it took like a year, which clearly I went in too early. But it was just kind of flat for the whole year, going up and down, up and down, up and down. And when around June, July, this is when silver and gold break out, and silver eventually break out. I got out of the position around late July, I believe. So I got out around the 100K mark. It was like a psychological mark for me, so that's where I got out. Somewhere there, it's like 80 to 100. And that was a really big trade, so it could have potentially like moved my portfolio. I got out at the right time before it crashed down again, but then it shoots way up. So if I did stay, that leverage position was so large, I could have like if I got out like at 18, which silver did get at that price. Not anymore, but now it's like 17.4, which is still pretty good. 17.5. So I did my calculation. I would have actually ended up with 160,000 to 170,000 if I stayed in the silver trade that I originally planned on a year ago on the exit price, which is like $17 to $18. I think I got out at the 16.3, roughly there. But it's okay. I mean, like, there was just way too much risk. The leverage position was so big. At some point within that 1 year period, actually was down 30%. So I learned my lesson. Silver is kind of dangerous to hold if like they could do weird stuff to you. Okay, so let's see. Yeah, it was like at some point my portfolio was down like in 36. I started at 50 and it went down to 36,000, which was not fun. That was like a 20-30% drop, 30 to 40% drop on the portfolio account. But I end up with like 23% gain in 1 year time. So this is 1 year. So not bad. I mean, most of the action happened in the last 3-4 months. So yeah, learn some lessons. Just at least like when you buy silver, worst case scenario, you just have to hold it for a whole freaking year. All right, so let's talk about the trade I had this week. I think this is a good thing to do. Like I just do like a general review on all the trades that happen. I like how Interactive Broker actually have like a 1 week history of the trades. Okay, all right. Let's see. This might be helpful for myself in the future. Just go through the trade and see why I did this stuff. All right, so starting from Sunday last week. Let's see what happened here. Okay, so this is Sunday night. This when market opened at 6 for the future market. Let's see what I did here. Okay, so I had the oil long position that was in the money for $55, and so it was at $55, and I lost like 20 cents which is fine because I had a lot of premium on it already. So in reality, I made money on that, but I took a paper loss of I took a realized loss of $1,400. I think it's here, $1,416, which is fine because that week I got, I think, 7,000 in premiums. So that 2 week I got 7,000 in premium. So 1,400 is like, yeah, cost of business, I guess. And which was a really small move because since then oil been dropping. So oil was barely almost hit the $55 last 2 weeks ago Friday, and I sold it on the when the market opened because I don't want to hold it. It was just not a lot of reason to hold it. I could sell more premium last week, which I did. So I sold it, and the market, oil tanked down to $52, which in actual time would have lose like 10-20,000 if I had hold it. So I only lose like 1,400, which is good. Then oil went down. It's still lowish, and then I sold so I have nothing position open after that, and then I sold the future premium put contract out of money, $44. Sorry, $54, and one expires. Let's see, one expires by last week. Yesterday Friday. So it expired on the 18th. So this was one of them is the 18th, the other one is the 28th. And on Monday I did nothing. Oh, I did stuff. Never mind. I saw another one because oil went down on Monday like hard. It went down to $52. So I sold another one that will expire in 2 weeks. So that was 50. Added money for 54, and expires in 28th of October. The silver went down to like 70. I think it was 74, $17 and oh no, wait, I had a silver position open. So for this position I took some profit. This was like way down next year's February contract that I believe I sold on Friday or Thursday 2 weeks ago. So for 2 days, yeah, it was a Friday. For 2 days, I got for over the weekend and the day, I got a 1,800, 1,900 basically return on holding 3 days of silver contract, which is interesting because it wasn't that much. I mean, I bought 4 contracts, which is a lot, yeah, but it's roughly worth probably 300 to 400,000 in actual turn, like leveraged. So yeah, it was a good amount, like for the percentage wise, like so it was good money for 3 days. And silver is always good to hold. Worst case scenario, you take down for the ride, and you end up the way for a year. I guess like that's my experience. So I'm a little afraid of silver. I don't want to go too big on silver. Oil, I'm okay with because I get a feeling that I'm pretty sure the people out there they back silver. Like the government backs silver, Saudi Arabia backs silver. Almost all the OPEC country they want the silver price to be stable. So I'm okay with silver. Sorry, not oil price to be stable, not silver. Silver, on the other hand, everybody trash silver. It's like Bitcoin people trash silver, the Feds trash silver. Probably people who want to buy silver to make like product of silver trash silver, so it's just there's no win there. Okay, so for Tuesday, what do I do here? What is this? Oh yeah, so after that day, silver went down again, which is great because I saw on the peak. So I showed the premium contract for silver again. On the exact same contract that I sold I took profit yesterday, Monday, and Tuesday I was end up to buying back at a higher price, but not it was like, so I bought it initially at 0.39. I mean, I sold it and then I bought it back at 0.3, so I made the 0.09 in profit, and now it's going back to 0.96 almost. So I got it from 0.96. Sorry, 0.3, yeah, 6. Now it went down again, but it's a long story. But anyway, so this one I I open a position. Basically, if you're not familiar how derivative contract works, it's hard to explain. Like it's a tongue twister every time I say that. So for you people who don't really get it, just understand that I was longing silver. I basically bought silver for the cheap. Okay, for Tuesday and Wednesday, I think I did nothing. I did a lot of stuff this week. Huh. Okay, so silver went down a little more, and I sold another put premium, which means I went long for silver one more. So I have 5 contract now, which is a lot for me. Like for this account, that's a lot of leverage. This I hate myself for doing this. I finally closed my British pound to USD dollars account, so I sold my 80,000 of British pound and converted back to US dollars. I only made $20. And since then, so see the price I sold it? It was like wait, what price did I buy it? The price I sold it was that can be the price. I got it way lower than that. No. Let's see. Huh. No, that's not the price. Whatever. I think I sold it at 0.24 something. And since then, British pound went up to it's almost 30. $1.30. So if I hold it, this position would have made me like $4,000 to $5,000. Yeah. So I fucking hate myself for selling. So I hold pound for almost 3 months now. Like since Boris Johnson became prime minister, I've been holding pound, and I took the write down for like $3,000 lost. People lost before, and I ride it all the way back. I ride it all the way down again for $2,000 lost, and I ride all the way back. Finally, I just go like F it because they're not going anywhere with the Brexit, and I think I leverage on the oil was too big. So I was still afraid of extra exposure to other positions. So I'm just like, I just want to drop the pound because I felt like the position wasn't working for me. Which is kind of same scenario I had before with silver and British pound last time when the Brexit in 2016. So, yeah, I basically missed out like almost like $4,000 to $5,000 profit for like if I just waited 2 more days. 2 more days. God. It's not even I needed it to sell. Like I just did it because I was bored. So, listen. Moral of the story: go do other things. There are other shit to do like in life. Go play, vacation, get a job just for fun. I don't care. Just don't overtrade. Don't sell your position just because you're bored. Because you're always right. Like not always right, but you're most of the right most of the time. Because otherwise you wouldn't be trading. You'll lose money. So trust in your original thesis, and there is such a thing as buying or selling too early. Okay, so on Thursday, I guess I close. What do I do? I closed one of my position. I think this is the I closed the silver position. So the silver one when I bought silver again on Tuesday, and then now I sell it again. I made like $1,600 profit for 2 days. That's pretty good. Like, that's pretty good for 2 days. And on Friday, yesterday, that's where everything happened. Let's see. In the morning, I did some crazy stuff. I bought another long position on oil, and I sold it on the same day because my margin account was getting too crowded. So they come out with some weird like uncertainty, the liquidity uncertainty scale, and I was like over the chart for that because I had all in all like 13 or 14 oil contracts, and that was too much. But I made some money on like just short trade. I think this happened within like 2-3 hours. So I made like $260 before the closing. I just got rid of it. This is too much because one of my contracts was supposed to expire, like, but they didn't. So I really shouldn't be holding this position for long term because it will just make my overall leverage too high, making me and the interactive broker uncomfortable. And when they feel uncomfortable, this broker, they start charging me daily like fines or something. It's $2, but it's still, you feel it. It's like it's not a lot of money, but you feel the burn. So $2 a day, I don't like that. So I got rid of it. Also, there's too much leverage. Anyways, so because my $54 position put contract got hit, and now it's trapped. And today it became a real contract. So it was a put position. Now it's an actual position of a 5 contract for oil. So my entry price is $54, and now it's excuse me, 53.85 at closing on Friday. So that means I lose like 0.15, which is much better than last week. It's a 937 paper lost after, let's see, how much is that? After $4,000, no, $3,000 in premium. So I technically make $2,100. No, $2,300, because it was like more than 3,000 premium. It was 3,500, I think. Anyways, it was a 4,000. It might have been 4,000. I don't know. I'm not sure. I think it might have been 4,000 premium because I bought another extra contract on top of the 4 put. So it might have been between 350 to 4,000. Okay. Anyway, so I if I could just close this position, I want to make money. But there's another way to do this, because 54 is pretty cheap. I mean, technically my price is really 53.6, because I have 66 cent in premium price before. So what I end up doing is on Friday I sold a coal contract. Do not ever do this. You basically short oil, but in my case this one expired by next week Friday, so I have like 5 days of risk, but it's completely covered by my long position. So I have long oil. This oil contract expired in some mid-November, so I have like almost a whole month to hold this contract. If I want, I could just hold it without doing anything, but I want to collect some premium while I'm at it. So I sold the coal contract. So I'm shorting, but it's a cover short. I have the oil to sell, and I'm selling premium for other people to insure their positions. And my reward is, my premium cost is $4,020. Well, sorry, $4,200. Meaning, if nothing happened to oil, it stay under $54, I get to collect that money just because I sold the insurance. But if it goes above 54, I will lose money on that because I have to pay people insurance now, right? But it's all covered by my loan position. Whatever money that goes up, it's gonna be equal out by this. The only way I could lose on this trade by the end of the week is if oil stays under $54, which is fine. As long as it doesn't go to 40 or something crazy like $30, then I will be perfectly fine. All I have to do is roll the position out. I sell another coal contract, and I collect another $3,000 to $4,000 next week. So I could just keep on collecting that, and every week you collect $1. At some point, you're gonna break even. It doesn't matter how low oil drops, and oil can drop too low because it's a physical thing. It's not like fairy dust Bitcoin. It can go to zero. All right. What is this? This is my my other oil put premium that will expire by end of in 5 days. So this I sell like 2 weeks ahead of the time. So this one will expire by Friday. I'm technically making money on that one. It's like $100 something, but my total premium is $4,040. $4,400. So if I do nothing, again, same story. If the price goes about $54, I get to collect the entire $4,000 plus the other $4,000 plus the other $4,000 from the previous week. So altogether, I get $4,000 3 times. So what is that? So it's like $12,000 for 2 weeks. If oil stays about $54. If oil goes down to 50, I probably will be like barely break even / losing a little bit of money. But I have a good feeling I hope oil is gonna stay in like the 50 to 55 range, because I could keep on doing this forever. My biggest fear that I don't want is oil go down to $40, which is great for gas and heating bills, but not so good for my portfolio. Or oil go up to 60, because if like go down to 60 or $70 per drum, then I can't do this anymore. It's just too expensive. Like it would take too much risk. So I have to decrease my position if that happens, and I don't want that. So this is a perfect time. I like oil staying in the same range. I actually want oil to keep going down, like slowly. I don't want it to go up, like at all. I don't want to go down too fast, but if you go down slowly, this is the perfect way for me to make money. If you go up very fast, I just make money one time, and that's it, one time down, and I'm just not gonna be comfortable opening new positions because it gets too expensive to insure the oil when it goes down. But that is how this week went, and altogether I probably only make like 10-15 trades the whole week, not a lot. Maybe realistically, I do watch the news all the time, but I didn't need to. Like I could go and do other stuff, but I did do other stuff, but it's just like I could literally do like anything else the whole day, and it wouldn't really affect any of my trades, because the biggest trade I made, aside from the silver, it was really just it was just chunk change. It was just like too good of a trade, so I did it anyway. But for the oil, it's really planned. Everything's mechanical. Don't really think too much. But I find out, like, from experience, the best way for you to trade, you come out with a thesis. You make sure that it's right. It might be too early. Just make sure it's right. So, and just make sure you don't blow out if you leverage. I feel like you have to leverage because of the inflation in Texas. So if you don't leverage, I don't see how you can make money. But if you do leverage, just make sure you don't blow up. And if your thesis is correct, which it has to be correct, otherwise you shouldn't be doing this, then you will make money eventually. And then you really don't need to worry about it, because if you bought it low, you bought it cheap, you know it's cheap, not because it's imaginary in Bitcoin, it's because it's physical-ish, like paper oil, paper silver contract. Then what do you have to lose? I mean, like, you bought something that's at lower price than you would have paid for otherwise. Then just make sure the price you go in and out is correct, leverage correctly, don't blow up. Then just wait. I mean, unless you're old, then you don't have a lot of time to wait, and that's a problem because people dies. But I'm pretty young, so just wait. I mean, there's nothing to lose. I could do other stuff. I could, be a normal person, don't trade. Once you set the position, it's like fishing or growing crops. You just set it and forget it, and then come back later. Everything's automatic, and then you know what you don't even need fancy algorithm to do this. You could, I mean, if you do a high frequency, I guess you could make money the way you trade, but then you have to be right all the time at all the high frequency. I just don't see how a machine can do that, even with like AIs. You probably could, but or you could achieve the same return. I guess the risk might be lower, but you can achieve the same return if you just set and forget it at the higher margin and the higher position than multiple small exit and entry. You just end up paying a lot of fees. But yeah, this is this week, which is pretty good, almost 5%, and $6,000 to $5,000. I wonder how much I made last week. Let's see. So this week, how do I do this? Okay, so it's still in October. Let's see, last week how much I made. Okay, so this is last week, not this week. I guess I make about it. Last week I made way more. I think it's because my account went down. Yeah, my account went down that week. So it's not representative. Let me change that for like. Let me change that for two weeks. Then we average it. Okay, so how do I say this? The last 3 weeks minus the week from last week. So the last 3 weeks ago, for the 2 week period, there we go. I made about 13,000. So that's 10%. So I actually did better the previous 2 weeks than last week. I thought last week was pretty good because I made 4.5. I guess, yeah, I don't know. Nominally, I'm sure it's the same thing because this divided by half is 6,500, right? So I guess on average, I make 6,500 a week now. It's like, that's a thing now. At least for the last 3 weeks, the average is 6,500. That's weird. I guess that makes sense because I'm opening the same position, and silver go up and down about the same time, like every week, and I don't trade anything else because there's nothing else good to buy. So, okay. So, yeah, for the moment, I'm making 6,500 a week, assuming I don't blow up. Because the way I trade, it's very high leverage, high margin. You could in theory blow out any time, so I could just lose like 80% or 70%, 60% before they do a margin call on your account, on my account. So it's not really a guarantee profit, but during the meantime, 6,500 is not bad for a week, and I'm not even like actually working. This is just one of the gig I'm doing. So, anyways. Okay, so that's pretty much it for the video. And if anyone asks, what am I doing this for? Basically, I see this as a selling insurance contract. It's just you collect enough money and then you go ahead and buy like buy a rental, like a store or a house. And I'm almost there. I'm just need like maybe 60,000 more, which would take like 2 months maybe. 1 month to 2 months, assuming the market doesn't crash on me. And for the market to crash on me, it's got to be the oil market because I don't trade anything else. So hopefully this works. I don't know. Like, who knows? But then again, most of my net worth is in real estate. So if it does crash, I'll just rebuild it. So it should. If you think about it, I'm really just leveraging high margin on stocks for income. And once I achieve a certain amount of a stock return, I'm just converting it into a bond. It's basically, real estate is really just a bond. So I'm kind of like stock and bond. I'm bond heavy, I guess. I'm not owning stocks because I can get 5 times, 6 times more return if I have all my net worth in stocks. But I'm mostly doing real estate. I don't know why, but it just turned out that way. Probably much smarter if I do everything in stocks. I would make like millions of dollars in returns, assuming it doesn't crash. So that's my basically trading strategy, and that's what I'm going for. No guarantee that works. I have no idea. This is just what I do now, and yeah, don't follow me though. No, follow me, but don't do what I do because you very well could blow up. This return, it is not normal. A normal return, it's 10-20% a year. A 200 freaking, how much is it? 300%, 227% returning a year. That is not freaking normal. Okay, there's something wrong the way I'm doing things. I don't know what it is yet. I couldn't see it, but then again, something is wrong. Like I'm way over leverage or something, but I just don't see the risk. To me is it's manageable. I don't know why, but yeah, this is not normal return. This is weird return. My normal return is 20 to 30% without leverage, and I must leverage like 5 times, 10 times. I don't know. Like, this is weird. Okay, thank you for watching. This is a very long one. The next one I'm not gonna be making this long a video. It's going to be just a weekly update. Okay, great. Bye.